Okay, today's topic is on chapter 6, revenue and income. So the question we are tackling today is page 65, the workbook exercise 3, question 11. Landlord charges rental. So what is given here, we know that the financial year end 30th November 20x6. So that means the beginning of the financial year, the whole financial year will start from 1st December 20x1 till 30th November 20x2. Following financial year will be this. So the timeline to take note is the financial year and tackling these type of questions. So you are given the rental rate of $4,100 per month. What does that tell you? What do you need to know? So you know your annual rental should be 4,100 times 12 months. This will be reported in your rental income in your financial performance report. So next, scenario given. The landlord received checks totaling 47,200 for rent for the year. Okay, so when you receive money, this amount, what do? You bank in, right? So you debit bank, and what do? Credit. Okay, rental income. So to balance these two set of figures, your total credit for the year 49,200, but you only receive 47,200 in the bank. So the other 2,000 short is actually your rental income receivable, which you have to balance up your total rental income for the year, right? So that's the answer, 2,000 rental income receivable. So how do you tackle this after the next year when it comes? Okay, when you receive the balance 2,000, you will still debit the bank, but this time you will credit rental income receivable so that it does not affect your reporting for rental income for the whole year, which stays at 49,200. This is what you report in your financial performance report. So the concept of rental income receivable is an asset. Okay, it's an asset class. Incomes become an asset in this case. But income can also become a liability in another scenario. So now let's move on to the workbook page 63, exercise 3, question 2. Ho and Tan runs a few supermarkets, own 2 shop space which it rents out. So first you have to figure out the financial year. That's the key to answering revenue. Because why? You need to know the income for the whole year. Okay, so scenario based again. So what happened? They receive 60,000 as rental income, out of which this rental income is for the period June 2000x3 to August 2000x3. That means what? That's overlapping. The year end is July. So this 60,000, one of it is actually for the year, the extra is for the following year. So the following year, rental income is actually received in advance because this 2008. This 2008 received in advance. It's not for this year, it's for the following year. Right. So you will see your total income for the year is actually 135,000. Okay, that's the income for the yoga lesson. And your rental income, if you already receive 135, but for the year is this, the lesson that you have not conducted will be following year, so it becomes a liability. You can only record 132,200 rental income for your financial performance. So the liability, just like your trade payables, following year, since you already received it, you will record this income in the following year by crediting rental income and zero off the liability account, right? So the concept of revenue become a liability is as follows. Okay, in the current financial year, you credit it as a liability. Any funds received, debit. Following financial year, record it in the correct financial year by zeroizing this liability account and your income in the correct year. Okay, so to summarize, how can income be asset and liability all at the same time? As the example if illustrated, when you have not received the money, it becomes a receivable account, so it's asset, income receivable, because you have to debit this account and credit your income for the financial performance for the year. See, but if you have already received the money, but it's not for the current financial year, so you have to credit this account and debit the bank. Okay, debit the bank so that your bank is accounting for this, and then when the year comes, you will credit this account and zeroize this liability account.